Hello everybody. Today's a busy day for me, so I have a quick video for you about this AI boom, and of course this video is inspired by NBIS. And NBIS yesterday up 60% at one point in the after hours. I mean, it still looks like it's gonna open like crazy this morning. And so in the wake of this crazy deal that they signed with Microsoft, you can see you have Bitcoin miners that are pumping. You have CIFR mining in after hours up 9.4%. You have IREN up 10.7%. And so this is a video about the transition from Bitcoin mining. This is a Bitcoin miner, right? A Bitmain and miner right there, Bitcoin miner. And this is, of course, the GB200, the Blackwell platform. Could it be as simple as we're all going to make it? Could it be as simple as, well, all of the electricity they can get, they are going to buy, and they are going to turn that into AI compute? That's the topic of this video. And very quickly, it's a short video, so I want to tell you my thoughts about this and kind of how I've been thinking about all of this. So I've historically been skeptical, not highly skeptical, but somewhat skeptical of Bitcoin miners who are turning into high-performance computing, and oftentimes I've been the more skeptical about that whenever they sold Bitcoin for that purpose, and that's the old Bitcoiner in me that's a little upset about that, and so hopefully you don't hold me accountable for that. But I don't like to see a Bitcoin miner sell Bitcoin. But curiously, of course, and it's not that curious, but I'm fine with a company who from scratch goes after high-performance computing, right? Like NBIS, right? And that's why I did not miss NBIS. I did have a little bit of IREN, but nothing that meaningful as far as my stock position. I did not miss NBIS. I'm happy I did not miss NBIS, right? But of course, it almost makes you wonder if IREN had no Bitcoin operations, maybe I would have been more interested in IREN, right? Because I tend to look at categories, and I don't like businesses to sway too far away from their core competency. But clearly, this move appears to be working. Clearly, I mean, if these two companies are any example, and if you also look at CRWV, I think RIOT is a company that could also take that move. Like, clearly, the move to HPC appears to be working somewhat. And so could it be that simple that we could just own the Bitcoin miners to benefit from AI and AI adoption? So a few key thoughts I want to share with this on this idea. In my view, and I've assessed miners this way before, in my view, the most valuable thing that these miners have are their signed power contracts. They are long-term contracts for power that they signed oftentimes in 2021, 2022, bear market, sometimes even earlier than that. They signed away long-term contracts for very, very cheap power, and now it's next to impossible to get access to power. And the cost of megawatts is a fortune now. It didn't used to be this way. Before AI, it was not this way. And Bitcoin miners, typically, they all have signed power contracts. And so they are becoming very valuable to these companies because typically they have access to cheap power. So that's the key catalyst number one is are we going to get to a situation where the average kilowatt hour in the United States costs like 35 or 40 cents a kilowatt hour? I'm talking for household use, or for even commercial use. And so what does that mean when these power contracts that these miners have signed are typically 5 cents, right? 5 cents or below is typically what you see. So that's point number one. That's a key catalyst. Second key catalyst is location may matter way less than I initially thought. And what got me thinking about this was reading about CIFR. If you look at CIFR, we have a few that are well located, like on I-35 between Dallas and Austin. That's a good location. But if you look, they have data centers that are in the middle of nowhere, just like IREN. Just like IREN, they have data centers that are in the middle of nowhere. And of course, that stock is bouncing on the AI HPC hype, as I could call it, maybe. And maybe it is hype. Maybe we need to be careful. But location may not matter as much as most initially thought, and as I initially thought. And why do I say that? Well, running fiber, and this I know this from IREN and what we are doing. Running fiber may not be that costly. Like it might not be that costly to actually run fiber out in these different situations. Over the medium term, too, we're going to have satellites over the medium term. And even if you don't have a good, you don't have a low latency, highly reliable, high speed internet with multiple backup fibers, even if you don't have that, and even if satellites are too early of a thing, you can still use a remote location to do AI training, which granted is gonna be the smaller share of the cut. But still, like location, if you add all this together, location may not matter as much as, for example, cheap power. So that's point number 2. A key catalyst number 3 that Bitcoin miners have is that Bitcoin miners, they typically have land, and they typically have buildings that cost next to nothing. It's all about being asset light. It's all about the mining, and we don't really care about the building. And so Bitcoin miners sometimes they do it right out of containers just on raw sandy land in West Texas. So it's not like they have sunk cost into outfitting certain buildings. In many ways. This is a greenway venture that makes some sense. This is a you just have to like build it. There's nothing, and so it's not like you have to demolish anything. You can just build next to it. They have a lot of land. This is a plus that Bitcoin miner sites have. If you look at your typical data center, oftentimes they are located at the heart of cities where you don't have that land, and you don't necessarily have a cheap building that you can just ignore and demolish, right? So managers have sunk cost. So this is something also that I think is important in Bitcoin miners. They have an advantage here. Next, another big point, and I've made that point so many times whenever I cover Bitcoin miners. Yes, the Bitcoin mining equipment will run to zero. It will become worthless, like maybe in 6 to 7 years, roughly. And in many ways, that's worse than GPUs. But these sites have a lot of their value in the transformers, and I estimate that the transformers are maybe up to 20% of the value of the mining equipment that these Bitcoin miners have. And these transformers, they're very valuable. In fact, they're super hard to get oftentimes. And they do not depreciate much. If not, for a bigger one may say they actually could go up in value because they're super hard to get. Remember what Elon Musk said, the bottleneck is transformers. These Bitcoin mining sites have transformers that can be repurposed for AI data centers and AI data. And then lastly, the last catalyst is that the demand for AI, it may be so high that actually bare metal GPU rentals could work. And we know that bare metal GPU is not what NBIS does. NBIS has an entire AI stack on which hyperscalers can execute their workloads. But given enough constraints, given the fact that a bunch of power is lacking, you could easily see an intermediary that has that AI stack capability who contracts directly with the miners, or you could see an hyperscaler contract directly with a miner, and then maybe they send out their own technologist teams and they deploy their own technology, and maybe you kind of like have a lease agreement that is also a bare lease agreement, like we're only renting the space, and we're and you could also see something where they're even providing their GPUs. Why not? I mean, you could see something very similar to a triple net lease that you see in a lot of commercial real estate, but maybe tweaked so that you include the power access, right? That's also could be something where they could make a lot of value, a big delta, a big margin between those power contracts that they have already signed. And lastly, the last bonus as to why I like to look at this play is that I know that we have some miners who have big hodl bags and who have a bunch of Bitcoin. And so it would be very interesting if they kept a bunch of their Bitcoin. I think many of them will. I think CleanSpark will keep the Bitcoin. I think RIOT, I think Mara will keep their Bitcoin. And so, like, take the example of RIOT, which I think is perhaps closer to the AI HPC vision than CleanSpark. If you take the RIOT is a hodler of Bitcoin, they hodl Bitcoin. You could have like a sweet spot company where you have a treasury, a Bitcoin treasury, a company that's used to stacking Bitcoin, but then you also have a company that is now high growth via the revenue line, who actually makes revenue in the form of renting out GPUs and being, AI clouds, AI data center clouds, essentially. So I'm warming up to this vision. Could it be that simple? Once again, are we all going to make it WAGMI, as the youth says? And the reason why I put WAGMI in the middle of my video is because of this ETF, which is one of the bigger traded ETFs. And of course, on this channel, I don't promote ETFs, but it's interesting to see the performance of ETFs as a proxy for the performance of the sector, And if you look at the top 10 holding into WAGMI, you can see you have IREN, you have CIFR, you have RIOT, you have a few of the smaller plays like Bitfarms, you have CleanSpark, you have Mara, of course, companies which I love very much. And of course, these two haven't done well at all in an ETF because ETFs are market cap weighted. And even though I really appreciate the performance of CleanSpark and Mara and the hodl bag and all that good stuff, if the stock price has not run, they are not going to be overrepresented in the ETF like IREN is. And RIOT has been holding up pretty well as well, actually. But IREN and CIFR have run the most. Cores has run a little bit as well. So anyways, the point I'm trying to say is that if you look, of course, at the performance of the sector, there is something happening with the Bitcoin miners that is inconsistent with what's happening with the Bitcoin treasury companies. Like if you look, the Bitcoin treasury companies, they've been as a whole in a valley of despair. Valley of despair, right? Strategy, as you always tell me on this channel, the stock is only going down. Well, it's only been a few months, but people get upset. If you look at that, clearly there's divergence with the miners, where the miners' outperformance has actually continued, unless, of course, you own CleanSpark or Mara, the most hated miners out there. In that case, then you probably feel the pain. But I think there's something to this. Could it really be that simple? I don't know. But clearly, AI HPC right now appears to be a better move than I initially thought. And so, anyways, hopefully you appreciate this update. This was not investment advice. This is not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.